A tech sell-off on Friday weakened some of those hopes for a Santa Claus rally. Our next guest, though, saying that the death of the Mag 7 trade has been greatly exaggerated. We want to bring in Lou Basenese. He is MDB Capital's president and chief market strategist. Lou, it's great to have you back here.
Good to be back.
On set with us. So talk to us then about maybe what's more realistic in your view about how this is going to play out.
Yeah, I think you're going to see tech continue to dominate. I mean, I was on the record last year saying that I didn't expect NVIDIA to have another banner year, and it did. And I think that was built on the strength of spending on AI, right? We're seeing that coming from all the Mag 7 names. Tech, if you look, it touches every aspect of life. I challenge anyone to spend a moment today that doesn't involve tech. So it's going to be that bias. I think what gives me solace in this, the heavy concentration, is the fact that if we look at the other 493 stocks in the S&P 500, expectations are for their growth in earnings to accelerate significantly. So from about 4% this year to 13%. So we need other names to pick up and carry the ball in 2025, and I think we're going to see that happen. The tech sector is obviously going to have the strongest growth, but we need to see everyone else participating. So again, it's that potential. The estimates are there as long as these companies can execute and deliver. I think you'll see the market stage another strong rally in 2025. I mean, if we think back in the middle of last year, everyone was saying that the S&P 500 was going to be stuck in the mud and not go anywhere, and here we are at the end of the year, up 26, 27%. I don't think that's in the cards. But a solid, 15% earnings growth should drive the market up, close to double digits.
On earnings estimates, we are already seeing them revised to the upside for some of these tech names. But I wonder if that becomes an Achilles heel moving forward as well. Because for NVIDIA, for example, we know profit growth estimates are declining. They're still moving up, but they're slowing. Yeah,
it's slower growth, but still growth nonetheless, right? I think that becomes, we talked about this maybe a little bit in the beginning of last year, had NVIDIA gotten way too ahead of itself, right? The expectations, that tends to happen. I think you see a reckoning of that when we deal with the Fed, right? If the Fed stays on the sidelines, which I think is becoming more and more likely, there's gonna be a lot more focus on, is that earnings growth accelerating? Is it sustainable, right? Because once you get the earnings report, now analysts are gonna move to, all right, what's next? Can you keep growing 40, 50, 60% at a clip? I think that's when you have to start worrying. In the Mag 7, you have to rotate, I think. If you look at it now, the most undervalued name there is Google or Alphabet, right? If we looked 6 months ago, it was Apple, right? It was trending down to like 160. Everyone said they were going to miss out on AI, and then lo and behold, look what happened, right? So you see a rotation in the Mag 7. I think you want to be opportunistic there. So if NVIDIA misses expectations, sells off, could be a good buying opportunity in 2025, but right now it looks like that Alphabet's trading at the most attractive relative valuation.
Well, what does the overall upside look like then for the markets in 2025?
Yeah, for me it's hard. I mean, I'm not an indexer, I'm a stock picker, right? So I look at this, is it bad to diversify an index? No, but you're probably limiting your upside to maybe 8 to 10%, like the averages, especially going in after 2 years of 20% plus gains. The earlier guest was talking, like, is it time to be a stock picker? If you're not a stock picker, then you gotta look at the mid cap, small caps, maybe some biotech sectors, areas where there's value still in the market versus these, stretched valuations. I know there's a chart circulating now about forward PE ratios and then forward 10-year returns, right? So when we're at the current levels, the forward returns are 0 to negative for the next 10 years. So if I'm just an asset allocator, I'm not looking forward to that. I'd have to look maybe internationally. They're starting to look cheap. But yeah, I don't think we're going to get a repeat of the last 2 years in 2025.
And it's hard with the valuations call because valuation doesn't help you know exactly when you're at the top, right? So what do you look at for timing?
I think for me, I look into the speculative areas of the market, right? Like the peak in the dot-com days was 40 to 80 times earnings, right? So we're not near that yet, but at the same time, you saw every other speculative asset rallying. So look across the market. Are small caps at historic highs and really frothy? No. Are biotechs at historic highs and frothy? No. Is Bitcoin pulling back? Yes. I mean, for me, that's the greed index in this market. You balance that with the fear index and the VIX, and I think you just haven't seen that yet. So if I see VIX spiking, Bitcoin breaking, 150,000, small caps and biotech mergers and acquisitions popping up everywhere, I'm going to start saying that looks a little frothy, and you have to be careful. But again, the markets can stay irrational a lot longer than we can stay solvent, as the saying goes. So those rallies tend to continue a lot longer than we think.
Lou, when you take a look at some of the risk assets and maybe the appetite here for risk heading into 2025, what does the deal pipeline look like? How optimistic are you about IPOs?
I'm super optimistic, and I have a different perspective in that we're an investment bank, but we deal in the earlier venture stage opportunities, and I can say unequivocally, we're seeing more and more opportunities at really compelling valuations that have a lot of headroom. So these aren't just niche products. These are potentially life-changing drugs that could cure diabetes, AI applications that could really make in the palm of your hands for a practitioner or a clinician that has a patient that's diagnosed with cancer in the middle of America, put at their fingertips the latest clinical studies. So things that have tremendous upside, and there's now, more importantly, there's an appetite from our investors now. I think the election had this big overhang of uncertainty. Like everyone just wanted to find out who is it, either one way or the other. That anxiety is gone now, so everyone's being very, very opportunistic. So I know from the bulge bracket banks, they're talking about a resurgence in M&A and IPO activity. I can tell on the even riskiest side of that we're seeing that as well from our deal pipeline.
And we're, 2 weeks out from those bank earnings, so we'll be able to get a lot more insight into some of that activity soon as well, Lou.
Yeah, absolutely.
All right, well, thank you so much for joining us. Really appreciate it. Thanks for coming in the studio as well.